Hi, Matt Blair, one of the founding partners with REI Capital Management and REI Capital Growth. I don't think people really understand why we built REI Capital Growth. And so I want to explain a little bit about where this idea came from and why we built this company. This REI Capital Growth is our flagship product and our initial product into the market. And I think probably one of the greatest real estate products that we could possibly come up with. Reason we built REI Capital Growth is because all publicly available real estate investments focus on delivering investors cash flow. But that's not what we're focused on right now. What we're interested in is a long-term real estate investment that focuses on growth, not just cash flow to the investor. Because cash flow to the investor means tax consequences. And if you own a piece of commercial real estate directly, you pay very, very little tax because you have the benefit of all of the tax benefits of owning that property. So most commercial real estate investments that are publicly available today, they put all of that tax liability onto the investor. And as an investor myself, I'm not really interested in taking on that tax liability. You know, the extra couple $100 or $1,000 that you would get from an investment is not moving the needle in my position, which is, I'm blessed to have that scenario. But the truth is, you need to put a lot of money to work to get a couple $100 or a couple of $1,000 a month coming into you. So what I was focused on is growing my money over long periods of time, backed by hard assets like commercial real estate. And I want that money to grow as reliably as possible, right? I don't want to take on huge amounts of risk. And if you're investing in private syndications, commercial real estate deals, the vast majority of those deals are focused on delivering value add opportunities, which deliver much higher rates of return and more value appreciation in shorter periods of time. And they deliver tremendously great returns, but you take on a lot more risk in order to achieve those returns. I think a lot of people just think real estate makes you tons of money, but the truth is, the majority of real estate is very boring. You know, it's very dependable. It's very reliable. There's not a huge amount of risk to it. The tenants are very stable. They've been there for long periods of time. And that's the majority of real estate. That development, fix and flip stuff is a very, very small percentage of the market. And as a small balance investor, you don't have direct access to the really stable stuff. And you don't have access to that stable stuff in a tax-efficient, long-term way. So we built this product to fill that need for ourselves, because this is how we would want to invest as small balance investors. This is where we want to put our money. You know, if we had enough money, we would just buy our own properties and just own those properties forever and reinvest and grow the portfolio. But it's really hard to get to that point. And then it's really hard to get to the second property and to the third and to the fourth. And so we realized that if we pool capital from many small balance investors, it gives us the weight and the power to start acquiring those properties. We can buy our first property with only a couple $1 million, and then we can buy the second property with only a couple $1 million. And if you break that down, that's a couple hundred or a couple of thousand investors. It's not that many people. But if we link arms together, we can take advantage of this amazing asset class. We can take advantage of all of the tax benefits of owning commercial real estate directly to minimize the tax liability at the corporate level, which gives us more capital to reinvest. And we're buying stabilized cash flowing properties from day one. So you buy the property, and at the end of the first month, there are checks rolling in the door. So there's cash flow coming in day one. And now we put this into a fund structure so that as an investor, you get the benefit of diversification. You don't have to pick each individual property that you want to invest in. The fund manager will build up a portfolio of similar assets that are diversified off a variety of different metrics in order to make the investment in the portfolio, in the fund, as reliable and safe as possible. Now, there's always risk associated with any type of investment, but you do what you can to minimize that risk as much as possible, and you build up a really strong base of investments or properties in this scenario in order to be able to weather any storms. So that's really what been trying to do with REI Capital Growth, is build a tax efficient, long-term, lower risk, reliable growth investment. And the way that we built our growth strategy, it creates a compounding effect. And, a compounding real estate investment is very, very rare to find. They do exist, but they're hard to find. Most people build them for their own account, really high net worth individuals. That's where we got the idea. Ultra high net worth individuals invest like this. So I hope that explains a little bit about why we built this company, and I hope it entices you to learn more and hopefully participate in our fund. So if you have any questions, please let us know. We'd be happy to talk about them. We love this topic. We love real estate. So if you have any thoughts, please comment, like, subscribe, do all those things, and hopefully we'll have you join our fund. Thanks.